What does it take to raise startup capital? We did the research and here's what we found.
I, Mercy Kialo, have been on the hunt for funding for almost 3 years.
Raising startup capital is the most misunderstood, most confusing, most emotionally draining parts of running a startup, especially in Kenya and in Africa. So we decided to try and answer this question by researching it. What does it really take to raise startup capital in Kenya? We talked to investors, we've spoken to founders who have raised millions, we've spoken to founders who have always pitched but have never raised anything, and we've spoken to accelerators, we've spoken to a whole lot of people. And what we found is actually going to surprise you. Finding number one, and this is an uncomfortable one, it's not about your idea. It's not about how good or how bad your idea is. You cannot use your idea to leverage capital. Forget that, type of thinking. You cannot use your idea to raise capital, because we see good ideas get cast aside every day and we see bad ideas raising money. For example, we saw Kun Foods that came here. Mzungu comes into our market and says they want to build a food delivery platform or business, and before you can blink, he has raised $1 million. And most of us are left wondering, the business model is shaky. The business problem, we cannot even identify it. Yet they raise $1 million and they end up failing. On the other hand, we know founders who have, objectively good ideas that are solving critical problems in spaces like healthcare, in spaces like water management, but they do not raise money. So if you think it's about the kind of idea that you have, forget it. It's not about the idea. A bad idea can raise money. That is finding number one. Finding number two, investors only chase big pies, or pies that appear to be getting bigger. What do I mean by a pie? I am talking about the market. I'm talking about the size of the market. Investors barely care about whether you're passionate about the business or whether you've been in that business for how long. Those are all stories to them. What really matters is, how big is this market? How big is it going to get? Is it shrinking or is it growing? And if that market is perceived to be growing fast, then the money is going to come very quickly. And I'll give you 2 case studies. Let's look at AI right now. The space of AI is being perceived to be growing. They project that's going to be worth, $1 trillion by I don't know when. So you can imagine the kinds of money that is being put into artificial intelligence. I don't even have to tell you, you already know. Case study number 2, Twiga Foods. Twiga Foods was just dealing with the food and supply chain for, vendors across the country. Was it a new idea? No. Was it technologically disruptive? No. But the perception at that point was very clear that market was going to expand. And so they ended up raising, I think, billions of Kenya shillings. So it's all about the perception of the size of the market. If your startup and if your business is in a space that is not perceived to be big or is not perceived to be growing, then you're going to really struggle to raise money. Finding number 3, investors want more than financial return. And this is the part that no one, says out loudly. Investors want more than just financial return. They want something that they can brag about in their social circles. They want to brag about some sort of impact that they have that is not just about the money. They don't want to appear like heartless capitalists. That really shocked me. They don't want to just appear like people who are dishing out money to get money, but they want to feel like they're having some social impact around the world. That is why some of them are going to, say we're investing in climate or in environmental preservation and things like that. And let me give you a very clear case study. There's a company called M-Kopa that here we associate with debt and some other negative things. But if you look at their strategy, they have been able to sell the story of social mobility, the story of empowering people, the story of electrification. And by doing so, they've been able to attract lots of capital, lots of debt. And I must say this, we also realized from the research that even though social impact cannot be able to shield you from, say, tough economics or the lack of clear monetization strategies and so on, So having something like social impact in your startup or a social impact angle is going to attract capital for you very easily. And it is going to retain that capital in your business very easily. A very shocking realization for us. Finding number 4. This was the loudest complaint especially from the underfunded founders. And they were asking just one question.
Where are the venture capitalists of Kenya or Africa?
And it's probably a question that you have too. In fact, we found that the average founder in Kenya can only access a maximum of 15 investors. And they're not even guaranteed of a response. They're not guaranteed that they will get a response from these 15 investors. Yet, according to research, you need to reach out to between 300 and 500 investors so that you can be able to raise your first $1 million in seed funding. And you probably raise that $1 million from only 3 investors after reaching out to 300. Yet, a Kenyan founder can only access 15. Does that explain why most Kenyan founders don't raise any money? It probably does. So we actually decided to do something about this problem because on our side, we had some access to a good enough number of investors. But over the past weeks, we decided to compile more data about investors, and we took a number of days just cleaning that data and organizing it by which sectors these investors invest in, which countries, which regions, which stage of funding, even the ticket size, etc. If you'd like to access that list of investors, you can just visit this link. We also added a number of other tools that you need to raise money. Visit this link, but maybe just finish this video first. So maybe just like and bookmark, and then you can visit the link later and it can help you to access those investors. But I trust that that should not be a problem anymore. Finding number 5. Guys, you need to have proof of whatever you're doing before you get any funding. You should understand that we are in a high risk market. And so no one is going to put their money in something that is untested. They want something that has traction, something that has retention, something that has repetition, something that has paying customers. You need to showcase that you have, there's this market pain point, then there's this group of people who have it, and they are willing to pay X amount of shillings, and they are willing to pay that X amount of shillings on a repetitive, basis. So if I can summarize this research and what we found, I would summarize it in 3 sentences. The first sentence: solve a real recurring pain in a big or in a massive or in a rapidly growing space. That is point number 1. Point number 2, demonstrate repeatable unit economics. Point number 3, show strategic value beyond money. Remember, we talked about social impact. And once again, here is the link to that tool where you can be able to access investor contacts of investors who invest in African startups, and you can also access a myriad of tools that can help you to fundraise.